Hey guys, Rafi here from the Endgame Investor, and today I have a very special treat for me personally and for hopefully everyone watching this. It's John Adams of Adams Economics. I think you call yourself this very strange economist. I would agree, we're all very strange economists, which means we're normal. Everyone else is strange, but the labels are all switched. John is something close to a personal hero of mine for his tenacity and research into the silver market. And I want to find a little bit more about the man behind you call him the Perth Mint Slayer, or is really trying to go after the Perth Mint for its for what he calls scandals. I don't want to say anything, or I'll put the word alleged here. I don't want to be served or anything like that. So everything is alleged. John Adams is from Australia, which was a very lockdown heavy country. And I think we all know what happened there. And I want to find out more about what led John into this whole industry. And a specific question has been popping up into my head in terms of hard money people, those who believe in honest money and basically honest weights and measures. I haven't run into any person who is a hard money enthusiast or someone who believes in honest gold and silver money, who also doesn't believe in medical freedom. I find that those who believe in medical freedom and hard money, it always comes together, and I think it comes from the same part of our personalities. We believe in honesty, and we see lies when they're apparent, even when nobody else sees them and they're all over the place. So that's my first question. Do you think there's a relationship between advocating medical freedom and hard money? Do you know anyone who have you seen anyone who's on the fence about one or the other? But they always come together from what I see. And second, we all have a story of how we got into gold and silver. They're not loved markets. They're pretty, people call them barbarous relics, or Keynes called it that. Most other people see it as just silly, or that we like shiny things and we have this obsession, but it's really nothing like that. So I have my own stories about how I reached it. John, how did you get into this movement? What made you a silver and gold advocate? Can you pinpoint a moment in your life when you changed and said, this system is all wrong and I've got to advocate for this, even though nobody seems to care about it?
Sure. Thank you for the invitation, Rafi, to have me on your channel. So yeah, in terms of my background, professional economist, I'm 40 years old. I've been doing economics for 24 years, started economics in high school. And I've done a number of different things in my career, worked in the federal parliament as an economic advisor to an Australian senator, been a bureaucrat, worked in the private sector, management consulting, and probably since about 2015, 2016, that's when I became really concerned and awake about in the Australian context, the household debt bubble, which is the largest in the course of Australian history. And I started writing a number of
household debt bubble.
Exactly. Yeah. So if you think the American debt bubble was anything to be concerned about before the global financial crisis, our debt bubble is so much bigger in proportional terms compared to what the Americans went through prior to 2008. So I started writing a number of articles about my concerns about too much debt, household debt, foreign debt in the Australian context. And then I wrote a four article series for an online publication, news.com.au, about my thesis around in terms of economic Armageddon. And I came up with a 6-scenario model that had 3 deflation, 3 inflation, and they wanted me to write a 10-point plan of how to prepare for troubling times. And one of my 10 steps was to have sound money, money that's going to hold its value no matter the environment. And obviously we know from the last 5,000 years, gold and silver has served that purpose. And so for me, I started buying personally gold and silver in terms of trying to preserve my wealth in 2017. So compared to a whole host of people in the market, whether it's Chris Marcus or David Morgan or James Anderson or Craig Hemke, who've been in these markets for years, if not decades, I only started in 2017. So I bought a few coins and started buying a few kilos here and there. And then in 2018, I thought to myself, well, so my wife said to me, if you want to do this as a full-time sort of occupation, you've got to be able to do something that's going to support the family. So I said to myself, well, if I'm going to buy precious metals, I might as well get into the industry. So I found I found a particular bullion dealership that was sort of doing some interesting stuff. It was on the rise. Reached out to them, and they were looking for a chief economist. So we went down and saw them in Adelaide, and so I live. I'm in Sydney now, so I actually live just south of Sydney. So joined up in 2018 with a bullion company called As Good as Gold Australia, which is South Australia's largest bullion dealer, and I've been there chief economist since 2018. So more than 3.5 years, approaching on 4 years now. And so I do articles and interviews and seminars for them. And obviously, I mean, my strength is to talk about the macro economy. Obviously, in terms of this debt bubble, central bank policy, all of that sort of stuff. But since I've joined the industry, I've really been a student, and I've been looking at all of these people who have been talking about manipulation in terms of Gettr, etc. And I've just been trying to get my head around what is the argument around manipulation. I mean, obviously, people like Geoffrey Christian said there's no manipulation, and then obviously, if there is manipulation and if we accept it, how do we overcome it? And so that's where in the last month I've written a new thesis on my website, adamseconomics.com, where I think most of the American analysts, I think, have misjudged how to overcome it. And so that's where I think we can sort of try to break new ground and make a contribution to the industry. And hopefully we get to cover some of that material today. Now, in terms of what you're saying about medical freedom and hard money, so yes, there is what I'll call there is a libertarian hardcore element that I've seen in Australia that is pro hard money, but also pro medical freedom.
Hard money is just another word for monetary freedom, really. If you dig down to it, it's all just liberty in different aspects.
Totally, 100%. So I mean, I have met some people who have actually gone down the whole they've gone down the rabbit hole with the establishment on COVID-19, even if they are pro gold and silver people. Some people believe it. Some people had to do it because of a whole host of they had to do what they had to do, if I could put it that way, given that there was a very restrictive policies in Australia, very much like Israel. But yeah, I mean there is a movement out there which is that they want to know the truth, that they know there's something wrong in the world, and it's not just about problems in the economic and financial system, but people just see that there's problems in the media, problems in politics, problems right across the spectrum. And because I've worked in some of these different areas myself, I've got some insights as to where I think some of the problems lie. And particularly with my YouTube channel in Australia, my main one, in the interest of the people, with my co-host Martin North, we try to talk through what we think are the important economic, financial, and political issues of the day, and we try to make a contribution. And our biggest contribution in 2019 was the federal government wanted to criminalise the use of physical cash above $10,000, and they had legislation in federal parliament, and so we broke the story first on our YouTube channel. We beat the mainstream media, and we were able to get all of our audience to participate in the bureaucratic process and the political process by putting in submissions where there was a parliamentary inquiry. I was called to testify to the Senate, and I was the only person from say the alternative media space to be called to testify. And obviously, given that I used to work in Parliament and I'm a professional economist, I had the expertise to warrant my calling up. And it took us 16 months, but we were able to defeat Parliament. So we were the second country in the developed world behind Germany that stopped these laws from coming in, and we were the first YouTube campaign in Australian history to stop the federal parliament from bringing in a new law. So we've preserved the freedom to use physical cash in any quantity in Australia without in terms of financial or in terms of criminal sanction. So that's obviously an important contribution. And obviously now what's happened in the last 4 weeks in Australia is that we've started to see some dramatic increases in terms of interest rates. And we've been warning Australians to get out of debt and not to follow what the mainstream media and the banks and the central bank have been encouraging people to get into debt and to speculate on property. And unfortunately, too many people who didn't listen to what we had to say are now going to see dramatic increases in their mortgage repayments. And so we're recording on Thursday here in Australia, and only 2 days ago, the central bank raised interest rates by 0.5%. Last month, they raised it by 0.25, and as we go forward over the next 2 or 3 months, we will see some more dramatic rises. And we have a lot of people in Sydney, Melbourne have taken $1 million mortgage, $1.5 million mortgages, and these people will be required to stump up easily $10,000 to $15,000 in additional repayments per year at these high interest rates. And there'll be a lot of people who are going to who won't be able to manage that cash flow obligation. And so we're going to start to see a dramatic, sharp downturn in the Australian economy. And there'll be certain households that will go bankrupt in the process. But we'll obviously see how much pain the central bank is willing to inflict and how much households can take.
So on that topic, I want to go. I'm not sure if there's a disagreement between us on this, and if there is, it's very subtle. So what I think, your stance is we have to try to overcome this manipulation and do something about it. And I don't disagree with doing things about problems. It's it's always good to act. And I didn't know anything about how you stopped the cash ban. That's it's a big accomplishment, and I congratulate you for that and thank you. For making Australia sort of a cash haven for people who want to move there and have at least some degree of monetary freedom. So my position on dealing with the manipulation is that if you've ever read Mermacan Capital, that's Daniel Oliver. So he's the guy that I think explains what's going on conceptually in the back door with all of this fractional reserve gold and silver, or fractional reserve anything really. He explains it very well. In terms of what happened between 1978 and 1980, what was happening was that the dollar, or the Australian dollar, or whatever currency it is backed by the assets on that central bank's balance sheet. That's what backs the currency. So now that most of it is paper, right? So it's the value of that paper that backs the dollar. So a lot of that is mortgage-backed securities and treasuries, which fall together more or less. So as the value of that paper falls, the value of the remaining gold on the balance sheet, and there is some in Australia and some in the Fed. Assume it's there. I'm just assuming. You could say it's not, but let's assume it is. Then what happens is that the value of the paper falls, so the value of the gold and balance sheet has to rise to compensate to even out the scales. So that's what happened between 1978 and 1980. It's not, silver went to $50 in 1980. That didn't really mean that silver was becoming valuable for industry, and like industry was really demanding silver. It was that the dollar was collapsing and the value of the paper on the balance sheet was collapsing. So the value of the gold and silver the gold really, and then the silver is really like a substitute for gold because people can't afford gold. So I think that's what's going to happen this time. As the housing market in Australia goes bust, and it's going to follow everyone in the world. So then those assets that are smacked on stuffed on the bank's balance sheet, the central bank's balance sheet, they're going to fall, and the value of the gold is going to have to rise to compensate. So I think the manipulation will be broken just by public demand. When they'll have no choice, they'll either get gold and silver or they'll starve to death. Whereas maybe correct me if I'm wrong, you believe that the manipulation is more, it can keep going and going for years, or do you think there's a point where, absent of us doing anything about it, it will break anyway?
Sure. So what I'll say, Rafi, what I'll probably say is how can I say this? Perhaps 1 or 2 points. I mean, the first one is that there are some commentators in the YouTube space who have been talking about manipulation and talking about the day that that gold and silver will sort of rise from the ashes and they'll go sky high. And one thing I will credit Gettr Christian right now, I'm very critical of him, but he has made the point that some of these commentators have given false hope to investors, and a lot of investors have taken up the mantle of buying gold and silver on the expectation of these dramatic jumps in price, and that hasn't happened. So now, in a free market, the price should go sky high, and it should be. And so obviously, when I'm more focused on silver, and the reason why I focus on silver more than gold is because, at least in the Australian context, and I'm not sure about in terms of Israel, but in the Australian context, the price of silver in Australian dollars has not gone above its January 1980 high. So in January 1980, in US dollar terms, it got up to about $48 US an ounce, $49. So, but the exchange rate between America and Australia at the time was $1 made $1.20 Australian. So that's why I think it was $44.35, which was the peak price in January 1980 for an ounce of silver in Australian dollars. And in 42 years, it has not beat that peak. So in that context, and here's the fun fact for you. In Australia, everything that isn't still in demand has gone up in price compared to 1980, except for one thing, and that's silver. So gold, all types of other commodities, real estate, cars, consumables, financial products, all of it's gone up in price compared to its 1980 high, or where it was in 1980, except for silver. So that obviously clears to me. I mean, that's an economic paradox that doesn't make sense, and obviously suggests manipulation. So as I've gone down the rabbit hole and I've studied about manipulation, I've thought to myself, well, what are the arguments for manipulation? What are the arguments that will lead to the end of the manipulation? And have any of those arguments come true? And is there anything else that is potentially missing that we should be focused on? And so, whether it's Chris Marcus or Big Swee or Craig Hemke or some of these other American commentators, obviously because the COMEX, which sets the price, is an American institution and the regulator is the CFTC, there's a lot of focus by North American commentators, both American and Canadian, about the COMEX and its role, and the role of the American government in terms of wanting to set the price. And obviously, if you look at the 1960s, in terms of the London gold pool, 7 central banks had a secret agreement to fix the price at $35 US an ounce, and that lasted for 7 to 8 years until it broke in 1968. And then obviously they needed to come up with a new solution. They closed the gold convertibility window in 1971 and then established the COMEX in 1974-75. So if now my view is, and particularly when we talk about medical freedom and all the other sort of shenanigans that governments have been involved in, I've just come to the view that anyone who thinks that anyone can beat Washington or Wall Street in terms of overcoming the value of these derivatives, in terms of trying to bring truth and transparency into the paper market, it's just not going to happen because, again, so whether YouTube censors me or not, I just think there's a level of criminality and corruption in Washington that cannot be overcome. Now, in relation to whether, so there's a guy in Canada called Patrick Kareem who's a hardcore technical chartist. And so I've been talking with him offline the last couple of days. And so even Rafi, if you say that the value of the assets on the balance sheet goes down and therefore gold and silver will rally, and obviously the technical chartists, I mean, what the technical chartists are saying at the moment is that we've had the fear trade, we've had the liquidation of positions, we've gone to the US dollar. Now they're raising rates. There'll be a point at which the central banks will pause because they're not going to implode the financial system and pop the bubble. So as soon as they pause, there'll be a flight of capital out of the dollar, out of the bonds, into commodities and precious metals, and that's when gold and silver is really going to rally. Now, my question to Patrick and to other people who believe that we're going to see a rally because of either the devaluation of the currency or the pivot with central banks is, in the silver market, we've got two established massive lines of resistance, and that's at $30 US an ounce. And that line of resistance has been established since August of 2020, when it rallied from I think about $17-18 US an ounce all the way up to 30. And then obviously in the context of last year, again, it rallied up to about $29.90 or $30 US an ounce, but it hasn't been able to get there. So the first line of resistance is $30, and then obviously the second line of resistance is in terms of in terms of $50, and obviously that $50 high was tested twice in 1980 and in terms of 2011. And so if you do and so I did this in an article. So particularly in terms of the Australian money supply. So from 1980 to 2019, the Australian money supply increased by 2,600%, and yet the price of silver is down. And the only way that makes sense is if the supply of silver has increased more than the money supply. And looking at both the Silver Institute and there was a report published by the American government in, I think, 1979. The best you can say is global available above ground stockpile of silver has gone up by about 2.5 times in 40 years, and the money supply has gone up by 2,600% in the Australian context. So why is the price down? So even if we see a devaluation of the currency, even if we see a flight of capital out of the dollar, out of bonds, once the central banks pivot, the question for silver investors is that enough to break $30? Is that enough to break $50? Or should the price be something different? Now, if you take a purist value approach, fundamentalist approach to valuing an ounce of silver, in Australian dollar terms, probably you're around $900 US an ounce. In US dollar terms, it's at least $600 to $700 US an ounce. So what's it going to take to get to that level? And I just came after talking to a number of the people and following their work and buying the newsletters and listening to hours upon hours of all of these various people talk about this manipulation story. Anyone who thinks that we can do this through the paper market and trying to, because I'm a big believer, you can't just sit on the sidelines and just watch it, because if you're a spectator, nothing's going to change, and the system's going to perpetuate moving forward. Now, to his credit, Chris Marcus has tried to do various things. So he's approached the CFTC. Other people have approached the various in terms of the regulators. Gettr. Obviously, Andrew Maguire approached the Department of Justice in 2011. There's been sort of action by the Department of Justice in relation to JP Morgan and spoofing. But is all of that going to actually result in getting us above $50 US an ounce? I've just come to the view that Washington is so corrupt. I just don't see that happening. So then the question is, well, if you can't crack the paper market, is there another way to bring enough pressure on the paper derivative market to push the price higher? And that's where I started to look at corruption and fraud in terms of the physical market. And last year I focused on unallocated and pool allocated silver. And I actually got this idea from Craig Kempke. He wrote an article several years ago that I found online where he talked about fractional reserve, unallocated, pool allocated schemes. And then obviously we had a problem in February, March of last year where the Perth Mint was struggling to meet their redemption obligations within their contractual time frame on their unallocated, pool allocated silver products. And really, I just made the point at that point that yes, the Perth Mint had defaulted, but if every silver investor that has an unallocated or pool allocated position, and so particularly in the Australian context, unallocated, pool allocated means that you basically have no legal title, you have no legal property in terms of silver, you have a counterparty contractual obligation with someone else that at some point in the future, if you ask for the silver, they're going to give it to you, but there's no guarantee that they are going to give it to you. So really, I was just saying was, if there are fractional reserve schemes in unallocated, pool allocated, or even in the more extreme case, allocated segregated accounts, if that fraud was exposed, and because my view is, I think we have an assumption as to how much silver is in the world. And I think that what the general market understanding is they believe that there is more silver than what actually exists. So how do you actually shrink the supply of silver from the perceived level to the real level? You've got to expose the fraud. And if you expose the fraud, what happens is market supply shrinks, and then you get pressure from the physical market. So if there's not enough supply in the market, and people realize that they were holding something and that ends up not existing, well, then they're going to go get that additional amount of silver. And if the silver physical market is tight, where do they go? They go to the derivatives market. And if you build up enough pressure in that context, that's how you're going to get a nickel event, say with the LME happening in silver. And just to give you two quick examples of just in the last week of how can this play out. So there's in Seattle in America, there was a bullion dealer that was basically taking client money, not buying any silver, no storage, charging storage fees, and they just got sentenced by the U.S. District Court to 5 to 9 years of jail for their criminal activity. But they took $33 million. And they never bought any silver. So imagine what $33 million in the grand scheme of the silver market isn't a lot of money. But again, if you start to think, well, how many kilos or how many tons of silver you can buy with $33 million, that obviously starts to add up. And then there was a more significant story reported by Bloomberg, where Glencore and some other mining companies made some huge leverage loans out. And the collateral for these loans was aluminium held in storage facilities in China. So once this fraud was exposed by Glencore and some of their fraudulent activity that's been exposed by the Department of Justice recently, certain people went to go check on these collateral aluminium holdings in China and realized that a lot of it was just on paper. And these loans were basically issued with no real backing. So if that can happen in aluminium, that can happen in silver. And obviously, you just need, in my view, one big event or fraud to be exposed that wakes up enough investors to redeem all of their holdings to see how much real silver there is. And that's where you're going to squeeze the market in the physical market. And that's then going to ultimately lead to pressure in the paper market, and then hopefully we get a 5x move like we did in nickel.
Right. What you're describing is trying to trigger. I mean, it's the same thing that happens in any fractional reserve market, whether you're talking about fractional reserve cash dollars or fractional reserve futures contracts or fractional reserve anything. If you trigger a panic or you're going to trigger a bank run on the bank that supposedly holds the paper certificates to these things that they don't have the backing. But it's the same thing that happens in history all over and over and over again since the 18th, 19th centuries. There's always bank runs at the end of these fractional reserve schemes. So yeah, if you can help trigger one, then yeah, you can end the illusion of a supply that doesn't exist, whether it's a supply of silver or a supply of aluminum or supply of whatever it happens to be.
Yes. But the really important point is that so and you know what? Look, I don't understand how some of these, particularly North American analysts, think, but I mean, a lot of them just focus on talking about the paper market. But no one's actually thinking about, well, if it is a fractional reserve scheme, how do we cause the run? And you're not going to cause the run in the paper market. So obviously that's why I said to myself, well, I mean, Gettr has been doing this for 20 years. Ted Butler's been doing this for more than 40 years. I'm thinking to myself, I'm not going to sit around for the next 40 years waiting for the silver to explode to $100 or $200 an ounce. I want it to happen now. I've got a large holding. I've got a family to support. If it goes to, I mean, I know people who've made millions of dollars out of crypto, and I stayed out of that market because I just didn't think that it was the right. I mean, I've got a lot of question marks about the integrity of cryptocurrencies and where it came from and what it's all about. So if people can make this money out of crypto, I want to make it in terms of this money out of silver, given that we know that it's manipulated. And I'm just saying to myself, I don't want to be like Ted Butler. I don't want to wait 40 years. So how do we bring this to a head? And that's why I've been focusing on, finding examples or developing this thesis of exposing corruption and fraud in the physical market. And then hopefully we get the nickel event and we can all retire and enjoy the rest of our lives.
Right. Well, I'm definitely on your side. And I will help you by continuing to buy silver wisely. And I think if the average layperson listening here, doesn't understand the silver market. You don't have to do much. I would say set aside a certain portion of your income to buy physical silver every month or every few months, and slowly and stack up. Do it wisely. Don't leverage yourself. You don't want to get kicked out of the game. That's all you really have to do to join. Just buy some silver. Be safely. Wisely. So we'll close this by John. Where can our viewers see all your stuff, all your research, your website, your YouTube channel, all that stuff? We'll put it in the description below, but say it here, and with that we'll sign off. And I gotta go. We got like 3 minutes left in this Zoom call.
Sure. So yes, so in terms of my main website, people can go on to adamseconomics.com. My main YouTube channel that I do with my co-host in Australia is In the Interest of the People, so people can look me up there. Yeah, look, there's a whole host of other YouTube channels that I appear on a regular basis. On Twitter, my handle is Adams Economics. I have a group on Telegram, Adams Economics as well, and they're the main channels. If anyone wants to email me and ask me any questions, john@adamseconomics.com, and feel free to email me with any questions.
All right, John, thanks so much for coming on my channel. I really appreciate it. You are one of my heroes, especially an Australian hero. And I'm just glad to be associated with people like you and know that there are still some real people out there that are doing some real work.
Thank you. And look, all I'll say, Rafi, is I enjoy your weekly updates on Arcadia Economics, and yeah, like you always have a new angle to explain what's going on, and I always watch your segment because I'm always learning something new, which is and that's what I think this community has to be. Everyone has a role to play. Everyone has a contribution to make, and the more smart people like you and I work on this, the more we learn from each other, and we build up the community to be strong around the world.
Yeah, exactly. Thanks for coming, and I'll see you soon, I'm sure.
Excellent. Thank you very much.
Okay.